What if Bitcoin's value dropped to zero? In 2010, it took 10,000 Bitcoins to buy just one pizza. Fast forward to today, and those 10,000 Bitcoins could buy you 52 million pizzas and still leave you with a $100,000 debt. Bitcoin is a massive question mark, a currency not controlled by any bank, country, or financial institution. You alone are its master. But hold on, it's nearly impossible to predict when its value will rise or fall. One night, you could earn $10,000 and in the very next hour, lose $40,000. Yet, in just over a decade, Bitcoin has gone from being a niche experiment to a global phenomenon, adopted by businesses, investors, and even entire country. Compare that to the US dollar, which took over a century to gain its dominance. So, is Bitcoin really the future, or do traditional currencies still hold the final say? In this video, we will unravel the enigma of Bitcoin, a currency born out of rebellion, mystery, and technological genius. Why did it succeed where others failed in the 1990s? What makes it so globally significant? What could bring it crashing down to zero? Most importantly, what would the world lose if the Bitcoin disappeared? Bitcoin emerged in 2008, but to understand its roots, we need to go back to the 1990s. During that time, several attempts were made to create digital currencies, such as DigiCash and B-Money. Both were designed as online payment systems relying on encryption, but they failed to achieve the expected success. From the 1990s up until Bitcoin's introduction, cryptocurrencies were largely unknown. Today, we're talking about the most famous digital currency in the world, yet its creator remains anonymous. All we know is that they used the pseudonym Satoshi Nakamoto. Despite numerous efforts to uncover their identity, no one has succeeded. Some theories suggest it might be Hal Finney, a former Bitcoin project contributor, while others speculate it could be Dorian Nakamoto, a well-known American-Japanese developer. However, no definitive evidence links either of them to Bitcoin's creation. What we do know is that in 2008, the first research paper on Bitcoin was published, and by 2009, the first version of the software powering the Bitcoin network was released. Bitcoin is a fully digital currency with no physical form, unlike the dollar or euro. It is stored in electronic wallets and managed directly by its users. This is why it's referred to as a decentralized currency. It doesn't belong to any country, government, or financial institution. But what guarantees its security? Bitcoin relies on a technology called blockchain, which is highly secure and more transparent than traditional currencies. One of the main reasons for Bitcoin's growing appeal is its efficiency in cross-border transactions, which are significantly faster and cheaper than those conducted with traditional fiat currencies. In 2010, the first transaction using Bitcoin was made. 10,000 Bitcoin were used to purchase a pizza. At that time, Bitcoin's value was extremely low, and the community around it was very small. But nothing stays the same forever. By 2011, Bitcoin began gaining popularity, and as we know, with fame comes value. Bitcoin's price started to rise, reaching $100 per coin in 2013. This attracted businesses and investors alike. Just a year later, big companies like Dubai Market and eBay began accepting Bitcoin as a payment method. The real surprise came in 2017 when Bitcoin experienced a massive surge, hitting $20,000 per coin. Imagine someone who bought Bitcoin in 2013 for $100. It would have turned into $20,000 in just 4 years. I wish that had been me. Although Bitcoin reached its peak during that time, in 2018, without any warning, cryptocurrencies' prices plummeted sharply. However, this decline didn't last long. By 2020, companies like Tesla and Microsoft began accepting Bitcoin as a payment method. This not only gave Bitcoin a significant boost, but also drove its price to $60,000 in 2021. Many countries started establishing their own regulations for dealing with Bitcoin, including the United States, Canada, the United Kingdom, and France, each with its specific Bitcoin laws. However, some countries have declared Bitcoin entirely illegal and banned its use. Why? Simply because Bitcoin is a double-edged sword. These countries view it as potentially enabling illegal activities such as drug trafficking, money laundering, and terrorism. Examples include China, Pakistan, Saudi Arabia, Tunisia, and Bolivia. People who buy Bitcoin generally fall into two categories. The first group invests in Bitcoin short term, buying when prices drop and selling at a higher price. The second group holds on to Bitcoin for the long term, regardless of whether its value rises or falls. Many people see Bitcoin and decentralized payment systems in general as the future. For them, Bitcoin isn't just an investment, they view it as the future of money and finance, especially as more countries adopt Bitcoin as a payment method and major global companies start accepting it as well. The question here is Bitcoin a reliable currency? If you have been closely following the Bitcoin market, you have probably noticed its unpredictable fluctuations. For example, Bitcoin might be worth $8,000, then surge to $69,000, only to drop back to $25,000. This makes it susceptible to collapse, just like any other cryptocurrency. In short, predicting what happens next is extremely difficult. But why would anyone hold a highly volatile currency like Bitcoin? While its fluctuations may seem daunting, there are 4 key reasons that contribute to Bitcoin's resilience and make a complete collapse unlikely. Number 1. Global recognition. Bitcoin is the first and most famous cryptocurrency. Many governments and companies have partially adopted it, solidifying its position in the global economy. Number 2. Integration into financial systems. Some countries, such as El Salvador, have gone a step further by integrating Bitcoin into their financial systems and officially recognizing it as a legal tender. Number 3. Bitcoin has a shield of global stakeholders. Bitcoin has become so intertwined with the global economy that its downfall could trigger widespread disruptions. If it ever faced a critical threat, governments and international organizations might step in, not out of love for Bitcoin, but to protect their own interests. Regulatory frameworks or even direct intervention could act as a safety net, ensuring Bitcoin's survival and preventing economic shockwaves. Its growing influence makes it a currency that key players simply cannot afford to let fail. Number 4. The unbreakable backbone. Blockchain's transparency and decentralization make Bitcoin highly secure and resilient. By recording every transaction on a tamper-proof public ledger, blockchain eliminates single points of failure, ensuring the system's integrity. This trust in blockchain technology drives strong support from users and experts alike, making a total collapse of Bitcoin unlikely. So, could Bitcoin, which currently trades at $97,000, actually drop to zero? And what would happen if it did? There are 3 things that could make Bitcoin lose all of its value. Number 1. No tangible backing. Unlike gold or other assets that generate cash flow, Bitcoin isn't backed by anything physical. This is one of the biggest reasons some countries reject it. It's essentially a currency built on trust, and while Bitcoin has gained global recognition, its limited adoption in the global economy makes it inherently risky, like a ship sailing in uncharted waters. Number 2. The blockchain bottleneck. Yes, even Bitcoin can have its limits. As more people buy and transact with Bitcoin daily, a critical issue arises. Bitcoin's blockchain technology, though revolutionary, can process only a limited number of transactions per minute due to its block size. Picture a freeway with only a few lanes. It's great when traffic is light, but chaos arises as the cars pile up. And let's not forget the energy cost. Mining Bitcoin already consumes a staggering amount of electricity. Now imagine if transaction volumes doubled or tripled. The energy demand could exceed that of entire nations, making Bitcoin environmental impact another point of contention. Number 3. The power of a single tweet. Bitcoin's value can be shaken by something as simple as a social media post. In May 2021, Elon Musk, the richest man on earth, tweeted that Tesla would no longer accept Bitcoin for car purchases. The result? Bitcoin's value plummeted by 10% in an instant. Imagine your savings account dropping in value just because someone had sent on a tweet. This shows how volatile Bitcoin is as an investment. It requires nerves of steel. Its value can be swayed dramatically by a mere your tweet. These are the three main factors that could lead to Bitcoin's collapse. If this happens, countries worldwide are likely to ban Bitcoin mining, trading, and usage. This would drive Bitcoin's value to zero. Such a catastrophic decline would result in massive financial losses for millions of cryptocurrency users globally. Additionally, it would erode trust in digital currencies. Bitcoin is the first and most famous cryptocurrency, and its collapse could lead to a loss of confidence in other digital currencies as well. But that's not all. We are also talking about the potential destruction of cryptocurrency related companies listed on stock markets, with a combined valuation exceeding $90 billion and investments totaling $37 billion since 2010. Other industries connected to cryptocurrencies, such as Nvidia, the manufacturer of graphic cards, could also take a severe hit. This initial shock wave could lead to losses of up to $2 trillion for Nvidia alone. As Bitcoin increasingly becomes a tool for investment or payment methods, its collapse could cause volatility in other financial markets, especially those linked to digital currencies. Companies managing large Bitcoin portfolios would suffer heavy losses, and some might even be forced to shut down. Moreover, the effects on blockchain technology would be significant. A Bitcoin collapse could diminish investor and developer interest in blockchain innovation. On a personal level, the collapse would devastate the livelihoods of many families who depend on the Bitcoin mining industry, estimated to employ nearly 1 million workers. All of them would suddenly have to seek alternative employment. Theoretically, it's possible for Bitcoin's value to drop to zero, but practically the chances of it suddenly collapsing through the scenarios we have mentioned are extremely slim. Regardless of the current speculation surrounding Bitcoin, one thing is clear: Bitcoin and other cryptocurrencies are set to play a more significant role in the financial sector and industries worldwide. For Bitcoin to face total collapse, fundamental changes to the cryptocurrency landscape would need to occur. Today we talked about one of the world's most valuable assets, but have you ever heard about the company that controls 10% of what the entire world produces in an entire year? To know more about this company, I'd leave a link right on top here. Finally, let us know, what do you think about Bitcoin's future? Do you believe it's just a phase that will pass, or could it become the future placement for traditional currencies? Don't forget to like, subscribe, and turn on the notification bell to get notifications of our future videos.